How long are we likely to see the elevation of prices as a result of the supply concerns?
Morning, Heidi. Well, as you say, we saw iron ore cross that threshold back above $100 a tonne from the end of last month. It advanced about 5% Monday, and prices are now, spot prices at least, are now the highest since August of last year, all because of those supply shocks, as you mentioned, that we've seen out of Brazil. Vale, the largest supplier in the market, has had to suspend operations because more than 180 workers have contracted COVID-19. Obviously, as you mentioned, the key question is how long is that going to continue for? Certainly, there are some estimates that it could be a couple of months. Morgan Stanley, for example, they see prices likely to hold above $100 a tonne for at least the next 2 months. Part of the reason is, it's not entirely clear how long Vale's operations will remain suspended. Potentially, these restrictions could remain in place until there are further court deliberations, or potentially until Vale satisfies sort of safety inspectors. So certainly expectations those price gains can continue. I guess the key unknown is, given the situation unfolding in Brazil, will we see other operations affected there as well?
Well, David, you've covered the supply side of the equation. What about the demand side? How long does China keep buying?
Well, absolutely. I guess that's really the key part of the equation, isn't it? We've seen a really, really strong demand from China, not only as that economy there has rebounded, but, even through the sort of worst of the coronavirus pandemic, iron ore has really held up because of the strength of China's steel industry, because those steel mills have continued to produce. That said, in the medium term, there is an expectation that demand will cool off and that prices, will revert. The global iron ore market, had been expected to kind of shift into a surplus in the second half of this year. That now may be delayed a little, but certainly there are expectations that before the end of the year, we're going to see iron ore back into a glut. We just had, a note this morning from ANZ Bank here in Australia saying they think this rally does look stretched. They do see headwinds coming in the steel industry, and they expect there will be some downside pressure on those prices in the coming months because that's cooling demand.
What about the copper sector, Dave? We saw that worker at a mine in Chile died as a result of contracting COVID-19.
Absolutely. As you mentioned, a worker from a Codelco site, confirmed as having died as a result of the virus. And I think one thing we will see, and one thing Chile's government has already said we'll see, is more supervision. The deployment of additional supervisors to make sure some of those mines are standing by protocols and are implementing some of those safety protocols. The question for the market is whether any of that will crimp output. So far we've seen most of the largest mines in Chile, the real key producing nation, they've managed to avoid any major disruptions. We haven't really seen too much come off on that supply side. Escondida, that's the biggest copper mine in the world. It even managed to produce more in April compared to a year ago, and that's even with a sort of reduced number of staff there as it puts into place some of those protective measures to reduce the spread of the virus. So I think people will watch the copper market, but so far it doesn't look like we've seen too much impact from the virus.